It's getting real hot. Right now, between China and the US, things have escalated. We've been seeing this going on for years. I'm going to break down what this means today and how this is affecting everything that we are seeing in the news, all of that and more. Let's begin by taking a look at no possibility of reconciliation as US slams China chips. So, of course, the administration implemented sweeping new restrictions. US move hampers China's effort to develop domestic technology. And we have seen this back and forth going on. What's happening here is that the United States has been saying we do not want chips coming out of China. This is a security risk. It's national security. We don't want to do it. You had seen Huawei and all these different things that have happened over the last little while. Restrictions, tit for tat. You look at the back and forth, and of course the tariff war. We are going to break this all down today, and we'll talk about that in the split screen mode. I've prepared two of those, and we will highlight some very important information. But for the time being, what we can see right now is that the US Commerce Department on Friday unveiled sweeping regulations that limit the sale of semiconductors and chip-making equipment to Chinese customers, striking at the foundation of the country's efforts to build its own chip industry. As you know, we've got so much coming out of Taiwan. Biggest companies right now, they are just supplying basically the whole world. China is trying to have that, and the US is saying we don't want any part of it. This has been an ongoing back and forth attempt to dismiss each other, to battle against each other. There's so much happening here geopolitically that it's not about chips necessarily, it's about supremacy, it's about hegemony, and we'll talk more about that. Now, I'm going to show you some things that are happening today, and I will bring this all together, okay? So stick with me. A California city's water supply is expected to run out in 2 months. We are looking at catastrophic failures in many things, whether it's the food, whether it's water, or whether it's our basic essentials. These all seem to be going completely out of the window today, and this happens to be just one of those. French petrol stations run low on fuel as strikes disrupt supplies. So whether it's because of something that's happening with Russia, or whether it's a strike or here or there, we are watching the same things being applied to people, and that is they don't have the basic fundamentals to go on. This is unbelievable. Strikers set for talks as some French petrol stations run dry. So imagine this. They don't have anything. They have no gas. And what do you think happens when gas stations run out? Of course, people start to panic. If that spreads around, this becomes a very, very problematic scenario, to say the least. Okay, and then we have this. This is actually showing us the UN Food Price Index, and that has come down substantially. In fact, it's come down at the fastest pace we have seen since 2009. That surprised me because I didn't know that this was coming down, but the pace at which it is has been quite shocking, to say the least. So we look at this and have to think to ourselves, it is still above where we were at the Arab Spring. Prices are still very, very high, but we have to see where the direction goes here. It's not as if people aren't buying these commodities, but what happens is maybe the speculation starts to leave one thing and moves into another. Remember, these are all futures. These are all based on other things that are not fundamentals. When you go to the supermarket, what do you pay? I think that's really the biggest thing. And then we move into my favorite and yours. Janet Yellen criticizes oil output cut, downplays dollar strength. All right. OPEC's decision is unhelpful and unwise. It's something that to me did not seem appropriate under the circumstances we face. And what are those circumstances? Well, right now, the United States is in a position where it is weakened, but the whole world is watching what they do. Let's talk about the connection between the US and China. So let's look at this, the US versus China. What's been happening over the last little while? Well, these two countries are in a battle for economic and strategic supremacy. And we've watched this go back and forth for many years, but it's really been escalating over the last little while. A tariff war was built up a few years ago, creating higher prices for companies as well as consumers. So US put a tariff on this country for this particular product, and that's the way the supply chain works. They're buying products, American companies buying, and they're basically trying to punish American companies for going towards China. But what does that do? Well, that American company then raised the prices on those American consumers. So that had an impact. There's no doubt about that. There's more to it, but that's something important to note. Uncertainty also made doing business internationally more difficult. So in part, we see that a business will say, well, I can't do business like this. I don't know what's going to happen. Is a 25% tariff going to become a 50% tariff tomorrow? I'm already being squeezed. Now, we've seen a little bit of those reductions happening, but certainly not much. Supply chains have been built on this JIT, or just-in-time system, and suddenly that became a warning sign of things to come. You see, they didn't learn that this was a problem, to rely on this system to be there tomorrow. How did we not get this when it was just before 2020? And then, oh, maybe the just-in-time system isn't so good after all. You, the individual watching this, ensure that you have any preparations made and that your products and or services that you sell are not entirely reliant on your local area. Why? Because anything could happen. Suddenly your area runs out of water. It's not exactly desirable. Okay, you see what I'm saying here? Or maybe your area is reliant on, let's say, cars, and now cars aren't being built there anymore. Hello, Detroit. You see these things in the way they unfold. Be very careful. Watch out for this. You've got to make these preparations on your own. Do not expect the government to be there to lend a helping hand. They can't do it, okay? Again, all part of the Pillars of the Money GPS. Stay tuned for more. I want to show you what's happening today with the economy as well as the central banks. So we see all of this unfolding, and I wanted you to see these quotes here. There's 3 in a row I wanted to show you. These are very, very serious things which I think are likely to push the US and the world. I mean, Europe is already in recession, and they're likely to put the US in some kind of recession 6 to 9 months from now, according to Jamie Dimon. Then we look at this. This is Paul Tudor Jones, one of the most successful investors of all time. Inflation is a bit like toothpaste. Once you get it out of the tube, it's hard to get back in. The Fed is furiously trying to wash that taste out of their mouth. If we go into recession, that has really negative consequences for a variety of assets. He's absolutely correct, and we'll see what happens. Fed-led dash for higher rates risks world recession, according to a top EU diplomat, saying the central banks being forced to match multiple US rate rises to protect their currency. Now, this is very important, and the reason why this is connected to China. I will talk about this further in the split screen we'll do in a moment here, but understand that China is doing something very different from the rest of the world for the most part. This is so unique historically, and I just wanted to break it down a little bit further in a couple of minutes. But understand that there is a very good point that the US dollar is the one to watch, and what the US does, the Federal Reserve does, makes a difference for the whole world. So keep an eye on that. Bank of England strengthens emergency stimulus to help ease market turmoil. Wait a second. They said it was just going to be temporary. What are they talking about here? Well, here we have the Bank of England just announced a new raft of measures to support the gilt market, with the headline points that it is going to double the cap of its daily auctions this week to 10 billion, but still halt all gilt purchases on October 14th. This, to some, this might seem like rolling out an extra bottle of booze just before forcing everyone to go cold turkey. I think it's pretty evident what's happening here is that this isn't working very well. The actions that they are taking, in fact, let me show you right now. First, here you can see this. So in those, in that first red arrow there, you're seeing over the course of literally just a few days, these things went from 3.5 to 5, over 5 actually, in literally a matter of a few days. And then they say, oh, we're going to support the market. We're going to make sure these things happen. Don't worry, we're going to pivot all this. And they started to drop. These are just like, anything else with US bonds. It's the same thing, okay? So what do we see? We see those starting to come down almost to where it was, back to towards 3.5, and then they suddenly have been rising up higher. So their activities haven't really done anything. They have no material effect. So the UK is basically saying, hey, we'll do more, I promise. Well, we'll see what happens. Interest rate rises the only way to tame UK inflation, warns Bank of England's deputy governor. That's interesting because the market believed that they were going to go and pivot, but according to the governor, he's saying, no, not at all. All right. And then I wanted to show you this. This is Nick Timiraos, who's basically the Fed's mouthpiece. Fed officials are raising rates rapidly despite some optimism that prices are coming off the boil because, quote, they have absolutely zero confidence in their ability to forecast inflation. I thought that was interesting because they say they don't have the ability to forecast, but if you look at it a little bit deeper, there's more going on there. Now, speaking of the Fed, Fed's Evans says fighting inflation is a top priority even if that means job losses. He's repeating what Powell has said and many others have said as well. The number one priority is getting inflation down. But on the other hand, you had Brainerd who came out and said in the same day, said, you know what, we've got to be data dependent, we've got to be a little bit cautious, this and that. So that alone had actually a material impact on what happened in the markets intraday. I mean, crazy, but this is what we have to deal with. There's a big change in what happened with China and with the United States over the last little while. I wanted to break that down and why this all makes sense. Okay, China did something very different in 2020 from other countries. They didn't do QE and lower interest rates to the same degree. You remember all countries were basically just saying, we are going to spend to eternity if that's what it takes to get this thing moving. China kind of laid back a little bit. They did a few things, but very little. They knew that the globalization system was built for them and would see massive inflows of capital. Just imagine how many things were being purchased out of China at that time. And so they were able to benefit from this huge inflow of capital. And of course, they did, in fact, do very well as a result. Now, of course, there were lockdowns and all these things, but some factors were really benefiting. Then when the slowdown occurred, more recently, China flipped the switch and pumped while other countries tightened. So imagine all these countries are tightening, they're slowing down, and now China is able to benefit on their end, pumping up the gas and letting it rip. While this may have been a strategic chess move, or perhaps just a coincidence, China is attempting to take a step ahead in the global chessboard. This is a very different scenario from what we had seen previously. You often have, at least in the last few years, all countries moving together. That was a bit, that didn't happen many years ago, but in more recent times, that's what's occurring. Now today, China is deviating. Watch out if you have too much exposure to one region or another. We don't know what the future has in store, but change is ever present. And these are the things that people should be paying attention to regularly. Watch what happens in other countries. Watch how things unfold. Watch the politics, but not the politics that are nonsense and, you get that stuff all the time. I'm talking about what happens between countries that will affect you, your business, your livelihood. If you are buying products from a particular country or your business relies on a stream of commodities or whatever it might be, a service or something that's coming from a place, and now suddenly your two countries are battling it out, that is going to have a material impact on your life. So pay attention, not to the nonsense, of course, not to the, the whole puppet show, but to the reality. That's a big, big difference. I want to thank you for being here. Did you find this informative? If you did, you want to subscribe. It's right down there below. I'll see you tomorrow for some really good info. Take care.